Good morning. You are watching a daily market outlook for Thursday, 14th of June 2012, prepared by Windsor Brokers. The markets remain choppy and nervous ahead of some key releases. The top one, of course, is the Greek elections due on Sunday, where we'll have more clues about the future of the European Union. However, from the other side, also the quite negative data that were released yesterday, especially from US, as retail sales came weak, kept the dollar under pressure, with euro still seeing not much appreciation against the greenback despite the current pressure. The top performer was gold, actually, that regained its safe haven status again, as on high uncertainty about current situation in Greece. They're turning investors again into the yellow metal. The Moody's slashed Spain's debt rating for 3 notches, and that's one of the top news also in past 24 hours. The Spanish government debt on Wednesday was slashed by 3 notches to Baa3 from A3, saying the newly approved Eurozone plan to help Spain banks will increase the country's debt burden. The Moody's, which also said it could lower Spain's rating further, cited the Spanish government's very limited access to international debt markets and the weakness of the national economy. Said the main focus is now on Greece, and basically the fate of European Union now is in the hands of Greek voters that will decide on Sunday whether they are going along with already accepted austerity plans or other quite disastrous scenario to reject everything and most likely leave the monetary union and the euro bloc. Number of events also seen today in the markets. So we have technical problem with our calendar. I'm gonna read it for you. The Swiss Central Bank meeting and the quarterly meeting and release of labor rate is due in approximately 10-15 minutes, and basically this is one of the key releases today, as the Euro Swiss holds for past over 1 month around the limit level at 120, and some comments and the expectations published yesterday said that there is a possibility of raising the limit higher to prevent further strengthening of the Swiss currency. At least some Swiss negative rhetorics are expected on today's meeting. We'll have more idea about this in a couple of minutes when the news will be released, as press conference follows, and the financial stability report is due half an hour later at 8 o'clock GMT. Also from Eurozone at 9 o'clock, yearly inflation release 2.4 is forecast for today, the same like the previous month release, while core CPI also on yearly basis is also expected to stay unchanged at 1.6. UK's CB leading index is due at the same time 900 GMT. We have no forecast. 1% is the previous release. Also important is the OPEC meeting today, as world is expecting to see whether there will be change in the output for OPEC, increasing the production or reducing. That will be signal, along with the already released signals from the fundamentals that world economies, leading world economies, are slowing down. That will be the trigger for a reduced demand for the energies. Also from US, we have a number of data to be released today. Weekly jobless claims at 12:30 GMT, 377,000, unchanged forecast from the previous week's release, with the inflation at the monthly inflation coming at the same time. Today's forecast is minus 0.2 compared to 0% of the previous release. US current account at the same time forecast is for the widening the trading gap to minus 132 billion US dollars compared to 124 billion dollars gap of the previous month release. With the news from Canada, capacity utilization rate expected to tick higher to 80.9%. That is today's forecast compared to 80.5%. And basically that would be all from the highlights of today's calendars. Not to waste our time, we're gonna move now to the markets. As a top performer yesterday was the gold. We will take a look first in the yellow metal and see the latest movements. It's bounced off a critical 15, 20, 30 zone is still underway as last week's dips found support at 1555, and the yellow metal regained the significant barrier at 1600, looking for a test of next very significant and strong barrier at 1640. This is the high of 6th of June, and basically a break above this level is required to confirm the short-term positive structure of 1530-20 support zone and allow for a stronger recovery. Supportive is current break above 55 days moving average with still a regain of 1640 pending to confirm, as this indicator was basically capping the recent price action from the beginning of June, keeping the upside limited despite some spikes higher. Regain of 1640, as said, is the initial signal for a stronger recovery of the yellow metal that is still in the larger pictures a downtrend, with the next significant barriers 1658, 50% retracement of 1790 to 1526 descend, and then static resistance 1671, 1st of May high. Any failure under 1640 would be again a negative signal and keep the downside still vulnerable, as the gold's price is still not far from the critical support at 15, 20, 30 zone, loss of which would be trigger for a more significant weakness of the yellow metal following its 10 years uptrend from approximately $300 per ounce that peaked close to $2,000 per ounce in year 2011. The single currency is holding its near-term positive tone of a recent low at 124.41 posted 2 days ago, but despite yesterday's spike higher at 126.09, nothing much was seen from this action, as this morning's lower top at 125.87. It's not confirmed yet as a lower top, but a failure to break higher still keeps the possibilities of further easing, as the structure on the daily chart shows that yesterday's and today's gains were limited by descending trend line of 132.82, with studies despite gaining some momentum still negative, and break above Monday's high at 126.67 at this point required to trigger some stronger recovery action. Basically required to open the fresh leg of the near-term recovery of 122.87, 1st of June low. Failure to clear the descending trend line on the 4-hour chart of 128.23 through 126.67 that currently stands at 126.22, which is also the strong barrier there. Previous peaks of 24th and 28th of May, as well as recent range top. Basically the pair is in the near-term range despite except the last Monday's spike higher to 126.67. The range is defined at 126.20 on the upside and the 124.30-40 zone at the downside, with still a positive structure seen on 1 and 4-hour charts, seeing potential of a fresh extension higher. Break above as at 126.22 as a range top, and a more significant 126.67 peak of last Monday is required to signal further extension higher. On the downside, initial support is the near-term consolidation, the bottom at 125.50. It's also overnight's low, where the 20 days exponential moving average so far held the dips, but more significant support is 125.40. It's ascending trend line of 124.41 low, and 125.25, 125.05 Fibonacci supports 50 and 61 percent, with the loss of the later along with the 125.00 round figure support to signal to turn the near-term outlook bearish, and focus towards downside 124.72 and 124.41 expected to come in the focus in case of loss of 125. On the upside, break above 125.20 and 126.00 and 126.09. Yesterday's peak is to open more significant, and the key short-term barrier at 126.67. Of course, all eyes are on Greece and Sunday's elections, where we'll, I believe, see some more action, and hopefully not that negative as expected. As some positive, in case of some positive, more positive news coming from Greece, then we might see some stronger recovery of the single currency against the US dollar. Cable lost ground again after several attempts at 156 zone, with the last one seen yesterday. 155.97 was seen ahead of a reversal under the descending trend line that was briefly broken, and a loss of overnight yesterday's low at 155.03, also round figure support so far dipped to 154.70, 38.2%. This was our initial support on the downside after breaking below 155, with loss of ascending trend line from 152.67, weakening the near-term structure as hourly studies dipped into negative territory. Overnight's high at 155.30, along with the 55 and the 20 days exponential moving average, with crossover of 20 days below 55, one keeping the downside pressure for now, along with the negative studies, and this offers initial resistance that is expected to limit the upside in order to maintain the near-term negative tone of yesterday's peak at 155.97. With the break here expected to prevent immediate risk of further extension lower, and allow for some stronger recovery. 155.66, 155.50, 155.66 levels are seen next. This is descending trend line, and yesterday's intraday high, break of which is to turn focus higher. But basically, break above 155.30 is to confirm the higher low at 154.72, and still keep the broader picture's positive tone of 152.67 in play, as 4-hour studies are still in the positive territory. Risk is seen on loss of 154.40, 50, and more significant 154 higher low. That will turn the near-term focus lower, and open way for 153.20 higher low of 5th of June. Also long-term bull trend line of 2009 low at 135.00. Key barrier on the upside and in the short term is the 156 level, and the break here is required to resume the short-term recovery of 152.67, and the open levels at 156. 156.30 initially, ahead of 157 and 157.15. Daily structure is still negative, though the studies are pointing higher, but not much to be expected as long as 156, 156.40 levels are keeping the upside protected, break above these levels to open way for stronger corrective action of the broader downtrend of 163.00 yearly peak of 30th of April, that bottom so far at 152.67, just ahead of yearly low at 152.33 posted on 13th of January. The dollar came under pressure again against Japanese yen, mainly due to negative data released yesterday, keeping the upside still intact as several attempts towards 80.00, our next barrier and round figure resistance, failed at 79.70.80 zone, keeping it protected for now. However, range trading established from the last week, for past 1 week, exactly from last Thursday, is still in play as the downside remains so far protected at 79.10, just ahead of 79.00. Our strong support, previous low of 18th of May, and the strong support, and basically it's the break point for the dollar yen as the short-term recovery of 77.65 stays limited just under 80.00. Crossing of 55 days below 90 days moving average keeps additional pressure on the pair, and the risk is seen basically on loss of 79.10, 79.00. That will open way for test of next dynamic strong support 78.70, 200 days moving average, below which will be very bearish. Ability to hold above 79.00 will still keep he will still keep hopes alive for a possible attack at 79.80, 80.00. That will open way for test of next barriers. 80.14 is the 38.2% retracement of the larger down move from 84.17 to 77.65, with the 55 days descending 55 days moving average currently at 80.22, ahead of a double top at 80.60. The dollar Swiss is again under pressure as a part of a larger down move from 97.69 peak of 1st of June, that so far dipped at 94.77, with recovery attempt from this level posted on last Monday, still being limited at 96.50, just ahead of 96.56, 96.75, our next strong barriers, with the still a negative tone seen on the lower time frames, keeping the downside vulnerable, as a bounce of yesterday's fresh low at 95.20 didn't show much so far. 95.60 95.60-70 zone, let's say, so far limited the upside with the 20 days exponential moving average, keeping the prices limited so far. Not too much to be expected on the upside. Break above 95, 93 and 96.00 is required to ease the current bear pressure and allow for a possible extension towards 96.50, our upside target. On the downside, loss of 95.20 and more significant 95.00 to signal a further extension of the downtrend from 97.69, with the 94.00 seen next, ahead of a more significant 93.66 higher low of 21st of May 2012 as part of a larger uptrend from a 90.41 low of 1st of May. Important also to mention that larger time frames studies are turning negative, as shown on the daily chart, as a loss of momentum, initial bullish momentum, might be signal and trigger for further weakness, with the loss of 95.20 support zone required to confirm and open way towards our next downside targets at 94.00 and then 93.66. That was all for today. We are back tomorrow morning again at the same time at 7:00 GMT. We would like to thank you for attending our live sessions. Also, this session will be shortly uploaded in the YouTube in our page called the Windsor Brokers Forex. Until tomorrow, I wish you a nice day and successful trading. Good luck.